Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio and what are the criteria that one should look at to help you navigate through this maze? We have on board Pankaj Matpal, MD, Optimum Earning Managers. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Good evening, Pankaj, and welcome to the show. We'll take the first question, which is from Vikas Patanwadia, and he has HDFC Top 100, Kotak Emerging Equity, SBI Small Cap, HDFC Multi Cap, ICICI Pro Multi Asset Allocation Fund, SBI Contra Fund in his portfolio. The time horizon of this investment is 10 years, and he wants 50 lakhs after 10 years. So, what is the kind of fund mix that you would recommend him to change or maybe have?
Kavita, good evening, and thank you for having me on the show. See, portfolio is good, all the schemes are good, but because he wants to accumulate the amount which he wants to accumulate 50 lakh rupees in 10 years, if you calculate at 12% CAGR, there is some shortfall maybe there because with 17,000 per month at 12% CAGR, in 10 years, we can expect around 38 lakhs. And because he wants to accumulate 50 lakh rupees, so he will have to increase his investment by 7 to 8% year on year basis. Means he can do the step up method in SIP so that he can achieve his target within the same time frame. Schemes are good. Only international fund is missing in the portfolio. So if Vikas wants, he can add one international fund. ICICI Prudential US Blue Chip Fund can be a good choice for international fund.
All right, so that's the solution for Vikas. We move on and we'll take Sushil Jaiswal's question, and he says that he wants to invest 5 lakh via lump sum for 5 years, and yeah, we don't have any other detail apart from this. We don't know if he has an existing portfolio also, Pankaj. But then lump sum for 5 years, he cannot take a lot of risk. This is a moderate risk profile. Then maybe how should he stagger this investment?
Kavita, see, one thing we have seen that there has been a rally in the market and stock valuation is not very cheap now. So considering the fact and his time horizon of 5 years, so I'll suggest that he should invest in some balanced advantage fund and large and mid cap fund. So not very aggressive funds. So in this case, like ICICI Prudential Balanced Advantage Fund can be a good choice in hybrid category, and also Access Growth Opportunities Fund, which is a large and mid-cap fund. So these two funds I'll recommend, and that too, instead of investing together this 5 lakh rupees, if we invest in staggered manner in 4-5 parts, that will be better, I feel, because we know that at this point of time, the markets are at almost peak. So that will be the strategy advisable for him.
I think I have Sushil Jaiswal on the phone line also with me. Sushil, your question was actually being answered by Pankaj Matpal. So anything else you want to ask, any other detail? Because the time horizon is 5 years. Over here, we can suggest you to take moderate risk only because of time horizon. Do you want to extend this to 10 years? Can this investment go up to that long?
जी मैम 5 years का मेरा गोल था.
Only 5 years, right? Okay. All right, so the suggestion has been given to you by Pankaj Matpal. Maybe you can watch the show on YouTube and note down the fund names from there. Pankaj, we move on and we will take Daya's question. And he's investing 32,500 monthly by SIP, current portfolio value he's sent you. And he wants to understand how much will he be able to accumulate with this investment, like roughly in 20 years. The funds he has in his portfolio are Mira Asset Emerging Blue Chip. He has SBI Small Cap, Motilal Oswal Nasdaq 100, Fund of Fund, Padak Parekh Flexi Cap, SBI Blue Chip, Canara Bank Emerging Equities, SBI Equity Hybrid, Franklin India, Feeder Franklin US Opportunity Fund in his portfolio.
Yes. See, here the investment horizon is quite long, 20 years is the investment period. But if we consider the current portfolio and the amount of investment, 32,500 per month, he has been investing. So he can expect around 3.70 crores in 20 years with a CAGR of 12% is assumption. But if he wants, means he increases his investment by 10% every year, because the investment horizon is quite long, and during this period, definitely his income will increase several times. So we can expect that the investment can be increased by 10% every year. And if I calculate with that 12% CAGR with the investment amount increasing by 10% every year, it could be 6.77 crore in 20 years. So now I think that will be a good suggestion, that if he invest his amount of investment every year. And one thing I have observed, all the schemes are good in the portfolio, but if you see international fund, the total allocation is around 23% of the total asset in his portfolio. So because usually we suggest that your allocation in international funds should be limited to some 10-15%. So here my suggestion is that if he wants to reduce, so there can reduce his exposure to international funds. Instead, he can add one gold fund to his portfolio if he does not have any allocation in gold fund, or otherwise if he has some allocation through some other means. Then in his existing Canada Robeco Emerging Equities Fund, which is a large and mid-cap fund, he can increase exposure in that fund. But my suggestion that from international fund, he should reduce the exposure.
We'll move on to the last question, and Vivek Goenka's question over here, Pankaj. Okay, what I can see is he's got a long list of funds in his portfolio, and 12 lakhs so far. He says that he has accumulated. The goal is 2 crores by 2033. So far, how does the fund mix looks like? And he also wants to include 2 mid cap and small cap. He has already included one, but then he wants to understand if it's right from diversification point of view.
See, Kavita, Vivek has already accumulated 12 lakh rupees, and what he says that along with his existing SIP, he will increase it by 15% every year. So if we consider again 12% CAGR here, he can accumulate around 1.57 crore. But in 10 years, but because he wants to accumulate 2 crore, so either he has to increase the investment amount right from beginning, if he increases his investment to 41,000 per month now, and also the step up of 15% what he has decided, then he can accumulate this 2 crore rupees in 10 years. Otherwise, if the same amount what he has been investing now and he increases by 15% as he has mentioned here, in that case, it will take around 11 and a half years for this to accumulate 2 crore rupees. So both the choices are there. I feel that it is easier that if he waits for 1.5 years more after completion of 10 years, then also it is possible that he can accumulate the 2 crore rupees. And as far as the schemes are concerned, this small cap, which he had mentioned, that PGIM India Mid Cap Opportunities Fund, see, every fund sometime may not perform well, but if the fund manager is good and fund house you can trust on, so I feel that you should stay invested. And here, if we talk about PGIM India Mid Cap Opportunities Fund, Vinay Pahadia is the fund manager who has good fund management experience. So my suggestion, you should not be much worried about the 1 year performance. Stay invested for long term, and definitely this performance will improve in coming years. And so that's the thing. And also this international equity fund, I'll suggest that he should have in his portfolio.
All right. And with that will be all for today. Thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries. But we move on.